Hello students, today let us discuss about the factors determining the working capital requirement of the firm. So before looking after the factors, first let us see what is the meaning of working capital. So working capital, it is nothing but the capital which is required to meet the day-to-day expenses of the firm. Say for example the purchase of raw materials or payment of wages or salary or any such expenses which recur in a business. So the expenses, the cash required to meet all these expenses is called as working capital. So now let us see what are the factors which will determine the size of the working capital of the firm. So the first factor to be considered is the nature of business. That is, what kind of business are we undertaking? Whether it is a manufacturing business or a service business, what kind of business it is. Because for a manufacturing company which is labor intensive as well as material intensive, the working capital requirement is usually high because they have to meet the various expenses related to the purchase of the materials as well as the payment of wages to the laborers. Again, when it is a service sector, the purchase of materials is relatively low, so the working capital requirement is also relatively low. The next factor to be considered here is the scale of operation. So the scale of operation, that is whether the business is indulged in a large scale business or in a small scale business. So for a business which is involved in a large scale operation usually requires large quantity of raw materials as well as large number of employees. So here the working capital required is also comparatively more. Whereas for a small scale industry or for a small scale business where the scale of operation or the size of operation is less, hence is the capital required also low. The next factor here to be considered is the length of the operating cycle. So length of the operating cycle, that is the time required to convert the cash into raw materials and then the raw materials into semi-finished goods and semi-finished goods into finished goods and again converting the finished goods into cash. So when this length of the operating cycle is more, the working capital required is also more because cash will be blocked in these forms for a larger time duration. So the working capital requirement also increases. Whereas on the other hand, when the length of the operating cycle is less, in that case the working capital required is also low because cash will be converted into raw materials or again the finished goods will be converted into cash at a short duration. So this is the third factor. Next, the fourth factor to be considered, that is the rapidity of turnover. Rapidity of turnover, that is nothing but how fast can we sell the goods. For example, if it is a fast moving consumer goods, for example the cosmetics or soaps or detergents, in these cases the goods can be easily sold without much loss of time. In such cases, the working capital required is usually low. On the other hand, when it is not the fast moving consumer goods or when it requires a lot of time to get the goods sold, in such cases the working capital required usually increases. The next factor to be considered is the nature of demand. That is, what kind of demand the product is related to, whether the demand for the product is predictable or not. When the demand is predictable, the working capital required is usually low. When the demand is not predictable, for example the demand for jewelries or the dress items, in these cases demand cannot be predicted well in advance. In these cases the working capital required is also usually high. The next factor to be considered is the level of automation. The level of automation here means the level at which the machines are used. So when the business is fully automated, in that case the working capital required is usually low because the number of employees is reduced. On the other hand, when the level of automation is low, in that case the working capital required usually increases because more number of employees are hired and more amount is to be paid in the form of salary or wages. So the working capital increases with the reducing level of automation. The next factor here to be considered is the reliability of supply. Reliability of supply, which is related to the supply of raw materials. When there is no continuous supply of raw materials, in that case a huge inventory is to be maintained regarding the raw materials. In this case, cash will be blocked in the form of raw materials for a longer duration. Hence, the working capital increases when there is no reliable source of supply of raw materials. The next factor here is the operative efficiency. That is, how efficient our business is or how efficient our employees are. That is, when the employees are not much efficient, in that case the working capital increases because more amount of raw materials are required and more number of employees are also required. On the other hand, when the employees are more efficient, in that case with limited resources they can undertake the business, or they can convert the limited resources into finished goods, so the working capital reduces there. So based on the level of efficiency, again the working capital differs. The next factor to be considered is the credit policy. So credit policy here refers to the policy followed by the companies, whether we follow only the cash policy or cash and credit policy at the time of selling the product. If we are selling the goods for both cash and credit basis, in that case the working capital required increases because the goods are sold on the credit basis and it takes a little more time to convert the debtors into cash. Hence, the length of the operating cycle increases and thereby increases the working capital requirement. On the other hand, when we follow the cash basis for selling the goods, in this case, the finished goods are directly converted into cash, so the working capital reduces. The next factor here is regarding the supplier's credit. Supplier's credit, that is how we are going to purchase the raw materials, whether we are going to purchase on the cash basis or credit basis. When we can purchase the raw materials on credit basis, the working capital requirement reduces because we may purchase the raw materials today and make the payment on a future date after converting the raw materials into finished goods, and after selling the finished goods we may pay the raw material suppliers. So when the suppliers provide the goods at a credit basis, the working capital reduces. The next factor to be considered here is the prices of inputs. Prices of inputs, that is related to the cost of the raw materials. For a business like jewelry or the diamonds, in these cases the raw material, that is the gold or diamond, these are usually the costliest items, so the working capital required to purchase these raw materials are usually high, so the working capital required is usually more. On the other hand, when the cost of inputs are not very high, the working capital requirement also reduces. The next 12th factor to be considered here is the level of profits. That is, what is the profit a business earns? With the higher profits, the same profit can be again invested in the business or it can be plugged back to the business, so the working capital requirement reduces. On the other hand, when the level of profit is very low, the cash available reduces, so the working capital requirement increases. The next factor here is regarding the banking norms. That is, what kind of policies the banks follow. That is, in certain cases, the banks will be imposing certain restrictions on withdrawal or the minimum balance to be retained by the account holders, or regarding the current accounts here for a businessman, certain minimum balance will have to be maintained. So in these cases, the working capital requirement increases in order to maintain the minimum requirements or in order to meet the banking norms which are set by the banks or by the government. The next factor to be considered here is regarding the taxes. So, for example, if we take the cigarette factories, in these cases the cigarette business or tobacco business, which are very highly taxed, in these cases the profits earned by the business, out of that a majority share is given to the government in the form of taxes. So very little amount is available for the business, hence the working capital increases. On the other hand, when the tax percentage is very low, the profits whatever earned by the business itself can be reinvested or itself can be used for the purchase of materials. So the working capital requirement reduces when the level of profit and again the tax percentage is low. The next factor to be considered is the dividend policy. The last factor here to be considered, that is the dividend policy. Dividend policy is regarding the business, what kind of dividend policy they follow, whether a liberal policy or a stringent policy. When it is a liberal policy, the profits earned by the business is distributed among the shareholders in the form of dividends. Hence, no profit is left for the business to continue their business. So this increases the working capital requirement. On the other hand, when the company follows a stringent dividend policy, a major share in the profit is retained by the business and that major share in the profit itself can be used by the business for the future production purpose. So when the company follows stringent policy, the working capital requirement reduces, and on the other hand, when the company follows liberal policy, the working capital requirement of the firm increases. So as we all know, cash is an idle asset. When it is not invested properly, it will not yield any results or it will not increase its value. So while we maintain the cash in the form of working capital, these are the factors which are to be considered, and based on this, the working capital should be decided and not excess cash is to be retained or not shortage of cash is to be faced by the business. So in the next class, let us discuss about calculating the working capital. Thank you.